faces. So welcome everybody, and we all gathered today to just share with you the performance of the bank for the year ended March 31, 2023. I have a structured presentation. I'll try to quickly go through it, but I will welcome any questions and I'll be happy to provide any further information you may like to have during the presentation or after the presentation, so depending on your convenience. Broadly, the presentation outline is what is being shown on the screen. We're first going to talk about the financial and business performance. I'll try to break the business of the bank into two categories. One is the business, policy business, which we do at the behest of Government of India, and the other is the commercial portfolio of the bank. We've also consciously looking at making a difference to the MSME segment, and we have come up with programs which have met with lots of success. So there will be one section on that. And of course, as Exim Bank, we have always believed in promotional and developmental role as to how we can make a difference to the society. So a small maybe canvas on what we are doing on our promotional and developmental role also. Again, I'm sorry I'm being very repetitive. I think all of you know about Exim Bank, but just to set the context, I'm so sorry. We were set up under an Act of Parliament in 1981. We are 100% owned by the Government of India, and we are the export credit agency for the Government of India. Given that we are owned by the Government of India and we are export credit agency, our ratings, that is international ratings, are on par with what the sovereign, that is Government of India, has. We run a substantial business on behalf and at the behest of Government of India. So this business is actually guaranteed explicitly by the Government of India. So we say that the substantial business or the loan asset of the bank is guaranteed by the Government of India. We have a very strong regulatory capital position, and by virtue of us being an export credit agency and being in the markets for the last 40 years, we have access to multiple sources of funds, both in the Indian markets as well as the international capital markets. Our purpose is to provide financial assistance to exporters and importers, and the view is to promote India's international trade. We've been working with various expert consultancy firms and internal brainstorming, and we have tried to evolve because we were set up 40 years back. The situation was very different at that point of time. So our vision today is globalization of Indian businesses and empowering growth of partner countries. Again, to achieve the vision, our mission is to facilitate Indian trade and investment. We've been always doing this, and support partner countries' development priorities as a financial, social and environmentally responsible institution. So one of the things which we'll go through these slides is that our engagement on that side, in terms of sustainability and the ESG frameworks, and how we are trying to align ourselves with the best practices happening globally. A very quick look at the financial and the business performance of the bank. Our operating profit has grown by 15%, and our profit after tax actually has doubled. So our profit after tax is 1,556 crore. In terms of our net loan assets, we have seen a growth of 14%. We are also seeing growth in our non-funded portfolio, where we give guarantees on behalf of Indian companies who are executing projects overseas. Total business little short of 300,000 crore. I'm sure by next year we'll achieve that also. We have fared very well in terms of the asset quality also, and this is something I would like to commend my team at Exim as well as the discipline of the Indian companies, that despite the COVID situation, we are not really seeing an adverse impact on the debt servicing capabilities of our borrowers. So we have seen a lot of discipline on the borrower side, and that has helped us maintain our asset quality. We have a net NPA ratio as of 31st March 2023 at 0.7%. Net interest margin, we always keep this slide because it makes us feel good, although we are not really profit oriented. I was just discussing one of our friends here, and I was saying that our principle is to operate on sound financials with due regard to public interest. So we're really not there in the markets to make money, but at the same time, we are not there in the markets to make losses for the Government of India. So it's a very fine balance we work, and I'm sure we have achieved that. So at a net interest margin of 2.3%, our return on equity is around 10%. If I talk about further breakdowns in terms of our asset loan portfolio, again, being an export credit agency, most of our business will be related to export finance. So roughly 77% of our total book is on account of export finance. We've been also running programs in India where we help Indian companies get export ready, and there we do typical capex financing in India. We also encourage and support Indian companies who have overseas ambitions. So we do overseas investment finance where we support Indian companies in their overseas ventures. So broad breakdowns in terms of how our 134,000 crore book is structured in terms of the programs which we are operating. We look at non-funded portfolio. It's a small amount of 17,000 crore, but I may say it's very important because this portfolio helps Indian companies provide guarantees to their overseas clients when they are executing contracts overseas. So most of our non-funded assistance is actually by way of project-related guarantees. We have given the breakdowns in terms of what type of guarantees we have issued, but basically performance guarantees and advance payment guarantees. We of course have a small portion of financial guarantees which we do depending on the need of our customers, so that's around 15%. Now, if we quickly dissect our loan portfolio, I'm again talking about 124,000 crores, so that's the breakdown I'm giving. So, being an export credit agency, essentially we operate in the medium to long term space. So, 82% of our book is long term, medium to long term, which is on the top left hand side. Again, being an export credit agency and basically we engage with overseas companies and sovereigns, we deal in foreign currency. So we've always had dominance of foreign currency in our balance sheet. As of 31st March 23, 74, that is almost 3/4 of our books were in foreign currency and 1/4 in rupee. Again, when we look at the type of finance we provide, although we are an all India financial institution, we engage with the customers directly. So we provide direct finance to our customers. We do not really go too much through the refinance route. Most of the refinance route which we do is also in order to penetrate a customer who we do not have access to. So there we collaborate with the Indian banking system and we provide funding to them for them to on-lend for export credit activities. So as of 31st March 2023, that portion was only 14%, with a bulk of 86% being on direct finance side. Now when we come to the balance between the commercial business and the policy business, when I say policy business, it basically means the business which we do at the behest of Government of India and which is fully guaranteed by Government of India. We call it Government of India Lines of Credit Program. So that is, we operate that program for the Government of India. So roughly 50-50, 52% was our policy business and 48% was our commercial business, which is basically Exim Bank doing business based on its own decisions. In terms of growth and fundamentals, I would say very robust. Today we are in a very robust position. Our operating profit has seen a consistently increasing trend. And it's not, there are no blips or spikes. So I think we have sort of managed to achieve that trend and the increase. So we are around 3,600 crore of operating profit, which I earlier mentioned has grown by 14 to 15%. We have registered a net profit of 1,556 crore. If we compare this with the last year, it's almost double. So I think around 110% growth in our net profit. There are other financial indicators also. There has been a consistent improvement. If we look at various parameters including profit per employee, we're particularly proud about our profit per employee because we operate a balance sheet size of roughly 300,000 crore with less than 400 people. So this of course then results in a business per employee at very high levels. It has actually grown in the last year. Our net interest margins, which I earlier explained, although not really a parameter or a barometer for Exim Bank, but still you feel good when you start making money. So around 2.3% NIM. Return on assets, yes, growing well, but again, as I mentioned earlier, not really too much of a focus for the bank. A return on equity, of course, because your stakeholder will ask you what you are earning on the money which they have given us, and the return on net worth. So most of these or all of these ratios actually are showing a healthy upward trend. Coming to capital positions, we've always enjoyed a very healthy capital adequacy positions. Government has been very supportive, and we have had capital infusions from the government of India on a yearly basis. In fact, in FY22, we were at 30%, which was, I would say, a very high capital which was given to us. So during the year, although there was a provision in the budget for a capital infusion of 1,500 crore, we have not really taken it, and our assets have grown. So because of that, our capital adequacy ratios have come down slightly, which I would say much more comfortable today at around 25.43%. Now, I did not mention, but most of our capital is tier 1 capital. So when we look at core equity also, we are almost at the same numbers. Coming to the borrowing side or the liability side of the balance sheet, it reflects the asset side. So earlier I was talking about 75% of our assets in foreign currency. So the same thing is getting reflected on our liabilities profile. Roughly 10 to 13% odd of our total requirements is funded through our own capital and reserves which we have collected over the year. The other is all market borrowing. So roughly 87% of our total resource base is market borrowings. We do not really have any support or access to our stakeholders or anybody else for market borrowings. And there again, given the profile that we need lots of foreign currency, the foreign currency resources